Well, good morning, traders. This is Louis here with the PLC Trading Camp. Last night, I sent you guys a trade setup alert. It's the first one of the group, and I promise you to make this video available during the London session. Well, now is 5:16 a.m. on August the 2nd, and I made this the alert indicating that price on the Canadian dollar and the Japanese yen was meant to drop. I spent some time after I made that call, or that after I sent that trade setup, I stayed up for a while, confirming my thoughts, and decided to use my short scalping strategy on it, which I already sent you guys a screenshot from my mobile phone while I was in bed. And this is so powerful, guys. I was able to, just in about 30 minutes, made about almost $100 in about 30 minutes. And, you know, I got out of the market because I was getting ready to go to bed. I could have very easily stayed in, and by now, at 5:18 a.m., I probably could have $500 in there. The price have dropped since last night's call, almost, actually about 20 pips, which would have been nice. I made it $96, $98, and that was only 10 pips drop. So with 20 pips, I could have been by now, somewhere around 180 while I'm sleeping, guys. This is why it's so powerful to do this. Even if you have a full-time job, it is easy to do this with small amount of time. Anyhow, as you know, my training approach is hands-on the market. There are plenty of sites out there with tons of resources like baby pips that will give you a lot of the foundation. If you're a beginner, I'll recommend you to check on babypips.com and go through the educational setup that they have there that takes you from kindergarten all the way to graduate school. It's free of charge, and it will give you a great foundation. The purpose of our camp, the PLC Trading Camp, is to teach you guys how to trade the markets, any market, with simple techniques that would allow you to quickly see a chart and get an idea where the market is going. And that's why you are a premium member. And my job is to help you make predictions quick, understanding one thing, and that is that none of us can truly predict the market 100% of the time. We all know, and if you don't know this because you are completely new when you're watching this video, or by the time you're watching this video, the market, especially the Forex market, is the biggest market in the world that is driven by the biggest banks and institutional traders in the world, meaning that price can do, and listen to this, will do anything it wants, regardless of your analysis. That's why we're not looking for a 100% accuracy. We are looking for at least 60 to 70% accuracy. In fact, even if your analysis is only 50%, you will make money at the end of the month if you do proper money management, which we'll learn those things as we go along, with only 50% accuracy. So if your money management is accurate and you do 20 trades and you lose 20 trades, but you win 20, I'm sorry, if you do 20 trades in a month and you lose 10 and you win 10, with the right proper, I'm sorry, it's early. With the proper money management, you should be able to make your account to increase in equity. Anyways, let's jump into this prediction. Right now we are live. It is 5:22 a.m. And like I always like to indicate in all my videos, I am not a financial advisor, so take this with a as an educational video. I'm just doing sharing with you what I think the market could potentially do as an education. If you decide to enter the market and invest or trade your own money, be aware that trading is risky. And like I said earlier, markets can do anything they want, anytime, and you might lose money. So be aware of that. Never trade money you cannot afford to lose. Never go into the markets if you're new, because if you've been here for a while, you'll know you'll never trade the rent money. The money you need to have to pay your rent, you don't trade that. The money you have to pay your bills, you don't trade that. The money you have to buy food, you don't trade that. You only trade what you can afford to lose, because you will lose if you are in the market. The goal is to win more, but there is not a single person that I know of in the planet that has been doing this for a consistent amount of time and not lose a single trade. You will lose. Anyways, let's go ahead and get started. So Ichimuko system is what we teach in the premium membership, okay? In the Ichimuko system, the reason why we teach that, or I decided to teach that, well, is because I've been very consistent with it, okay? Simple as that. It's a system that shows you many things with one indicator. And I'm gonna go ahead and highlight some of these things and why those things helped me make the prediction on the Canadian Japanese yen last night that it was gonna go short, and as you can see, it's going short. So the first thing we gotta understand, and assuming you are completely new, and if you are not new, and you've been here for a while, or you've been trading for a while, you just haven't been consistent, it's critical to understand that the market has a structure. And when we look at charts, the first thing we look for is, or the first question you need to ask yourself is, what is the structure? One is structure. O estructura en español. Okay, and that's too big. All right, and I don't want a yellow. Let's close this. The first thing we look is for structure. Right. And why do we look for structure? By the way, these are the arrows that I sent you last night of potential. Look how it's dropping, and I indicated it will come down to this pivot daily, and probably will jump back up, which that's exactly what I think it's going to do, mainly because this blue line right here is telling me that the momentum on the market is bullish. So we are outside. If you can see this dark cloud, we are outside the cloud. This line here is called Chiku span. I'm not going to confuse you with names right now. I'm just going to point the lines, and then I'll tell you what they signify and why they're there, and it helps you make predictions on where the market is going. So the blue line is the momentum of the market. Not only is the momentum, but it shows you whether the market is in equilibrium or in disequilibrium. In other words, when the blue line is flat, it's telling me the momentum in the market is flat. Therefore, the farther the price gets away from the blue line, disequilibrium of out of equilibrium, disequilibrium begins to take place. Price likes to bounce off the blue line, and as you can see here, price went up and insisted to push up, but it failed to close really outside. Actually, you see here how it did close, but on the opening of the red one, it went back down. So the blue line will serve as the equilibrium. And the farther it gets, here is flat, look how far it is. It's always going to come back to it. So if it's on an uptrend, you're up here, this is flat, it's gonna come back to the blue line, and then it's gonna go back up. Okay, so when we understand what the blue line does, last night when I made the prediction, blue line was here, flat. And the candle that I was talking about was the opening of this one, which it was almost flat right here. I'm gonna show you that screenshot in a minute. Hold on, guys, I'm taking my coffee, my morning coffee. So I saw the blue line flat, and I realized that price here broke this bull fractal over here, but it was immediately rejected. And this is where, after you understand structure, which really, I don't want to confuse you too much, you really look at the structure from this perspective, okay? You got to zoom out a little bit. And we trade supply and demand zones, all right? And I didn't make the prediction based on supply and demand zones because we're not in a supply or demand zone. We're on the way there. But you can very easily know this right here is a a supply zone right here. And we're right here. So we're on the way there. So I can tell you, once this thing bounces, it will be interesting to see what's going to do at this resistance line. So when first we do the structure, right? Then, let me write it right here. Then we are going to look at price action. And as a member of the premium chat, I already gave you the candlestick Bible that explains the meaning of some of the candles. There are tons of candle formations with tons of names. And guys, trading, it's already complicated enough to make it more complicated with trying to learn all those formations. So with my system, I've learned that there are some very critical candles that we look for, as if we have an illustration, as you have the train going up, and then structured, it's the station, right? Price is the train, structured is the station. And then price action, it's going to indicate whether at what time the train leaves, whether the train is leaving now, or if it's not leaving now, where it's going. If it is leaving now, where it's going, I'm sorry. So this right here is a classical rejection candle that when it hit this level right here, look at this line right here, it immediately was rejected. Now, if you really see where it was rejected, it was on this resistance from several days, actually weeks ago, because we're on a daily. This resistance from weeks ago served as a resistance here. Now, you see this resistance here, you also see it on the cloud with this flat line here. And you also see it with this price being bouncing here. Look at that. So actually this is where it bounced. I mean, let me throw this line so you can see. Again, we're analyzing the market, but we're also learning, okay? Look at that. So this bounce, let me actually move it for a second. I want to tell you something. This line, by the way, it is called Chiku span. Okay, and Chiku span is measuring the price 26 periods before. In other words, 26 candles before your current price. Because price moves and, hold on a second. Because price moves in waves, in other words, it's never up and down. I'm sorry, I was doing something else on my other computer, my other monitor, and I'm kind of distracted. Just give me a second. Okay. So it is 26 periods back, I'm sorry, and it's going to serve as a kind of like illustration because the market will repeat itself. Here, history will repeat itself for the most part. Again, not all the time, but for the most part. And every time you see these bounces, look at this peak right here. We can go over here and look how price was held right over here. And so it dropped, right, down to here, which is right here. Then it went back up and it dropped again. So in other words, you can use this to kind of visualize future resistance. So right now we're dropping. Let me ask you this. Right now we're here. Look at this big drop. Look at this big drop. So look where here there is a flat Chiku span. Where is that flat Chiku span? Just a little bit below the pivot point. Are you beginning to see this? So now that we know it was going to bounce here, it did bounce here. It was rejected. On this example, it did went up and then it dropped big time. And over here, it got to here. It tried to push a little higher, but it was rejected and it dropped again. I mean, it dropped. So this line in combination with, I wanted to just show, by the way, that resistance there. This line, the blue line, okay, which is called Tiken-san, it's going to serve as the magnet for price. So when you combine flat market, like it was last night, with the resistance, with the exhaustion, and at the resistance, guess what's going to happen? It's going to come back to the blue line. Simple as that, guys. Now, the green line, it is also known as Kijinsen. And Kijinsen is actually the momentum directly related on price. So notice how it sticks close to price all the time. And again, it kind of works in the same way as Kijinsen, where when it gets farther away, when price gets far away from it, it's going to chase it. And this is when you entered the market, okay? When you see this chase, actually, one of my way of trading Ichimuko is using what we call TK crossover, and that happened here. Okay, this is one of the ways. You can trade Ichimuko in many ways. This little cross of the green line over a flat or a moving blue Kijinsen is called a TK crossover. And if you look at that, just looking at the past, look at this. You would have entered this market on this cross, you would have made 144 pips in 2 days. Now, again, what do we look for? Structure. If you enter this market here and you understand Ichimuko, look how this one stayed flat. You know, or you knew when you were doing this trade, it was not going to go too far past the structure, which is the resistance right here. And look what happened. Look how Chico span shows a bounce, drop, try it again, and a big drop. Guess what happened here? Went up, boom, it touched the ceiling here, and it dropped. But I can tell you there were a lot of bulls in the market. They were trying to push this market higher, and they tried again, but it couldn't. Tried again, and it couldn't. Now they are a bit higher. This drop here with this candle with long wick tells me that a lot of traders were trying to push the price here. So a lot of orders were triggered. And I'm not going to go in details right now because I don't want to confuse you. But this is a good thing. When you see this, all these orders were triggered, but it was rejected. So price went back up. That tells me that very soon, remember guys of the words confluence. When you look at all these things, you see the resistance, you saw the crossover, you got to this point where the strength is weakening, all the sales orders are triggered. Kijinsen is all the way down here. This could have been a good prediction to enter short and look for the whole entire day. Price did nothing but desperately was looking for the blue line. It's like, where is my blue line? I need it. So he dropped all the way here. Now, after it got to the pivot, which is right where Kijinsen is, we see this doji. And doji is one of those candles patterns that we're looking, candlesticks pattern. Are we going to be paying attention? Because it's telling me by the size of it, and you know, people are not decide. They don't know what they're going to do at this point. But in structure, which I go back to the step one, I think it could be easy to say or fair to say that we are on an ABC pattern. One, A, B, 2, and guess what? This should go up to here. There you go. This is part of the structure, and this is one of the concepts of the Elliott weight, which when we apply to Ichimuko, we look for ABCs, 1, 2, and 3, which I'm getting now to my point, why I think this is gonna go up, but not before it goes down. I already explained to you where Dickinson is, which it was going to force this price to drop, right? Guys, this training alone, if you just listen carefully and you just dedicate to read the charts, looking for these things, you're gonna make a lot of money. So it's not that complicated, guys, just by doing this, okay? But again, practice makes perfect. So you gotta do, that's why I'm, I don't want you to trade a real account until you feel comfortable reading all these things on demo, okay? Because I want you to train your eyes to look for these things. So we are projecting this price to go up, but Dickinson was all the way here. And there was a rejection here. So the structure of the market showed me a ceiling here, and it confirmed the structure of the market with a ceiling with the candlestick. And now look where price is, guys. By the way, I said I should have stayed. When you see these things, sometimes you wonder why I didn't stay. But even though I've been doing this for a long time, I know better. And that is never, never, ever, ever, ever find yourself regretting your trade. I could have made more. I could have done this. Listen to this. If you want to be a long-term trader, you need to be patient, and you need to lose your thinking of missing opportunities. It's called, in English, we call it FOMO, which means feared of missing out, or el miedo de perderse la oportunidad. So do not be concerned if you make a prediction and you're not in the market as it's happening. Right now, I'm not in the market, and I could be making money. But when I said be patient, I'm also saying do not be greedy. Do not be greedy. You better make small wins consistently. By the way, I'm going to show you after this video on the chat, and I'm going to post this on Facebook too, a screenshot of my last 2 weeks of trades, just 2 weeks. So you can see how consistent my trading system it is and how confident you can be on this system. And I have a lot of small wins, but I'm telling you, all of them are wins. And I said earlier that we don't want to say it's 100% accurate or your trades will be 100% in wins. But after a while, you could be very close to it. That's why I said mine win to lose ratio is somewhere around 93, 94%. Sometimes a little better, but I don't want to be cocky. All right, guys. I want to stay humble and do these for the glory of God. And I've learned my lessons every time I start being prideful. And guess what? The market humbles me. So going back, and we're almost done. This is where the market is, guys. So check it out. Open up your charts and install Ichimuko Cloud and start following. On our strategy, we look for the daily for setups, right? And the 4-hour for our targets or triggers. By the way, look at that rejection candle, how much better it looks here. Okay, you see that? Look how it was above resistance. So it was support. When this rejection candle happened, look how flat this was. And I've already told you, even though it tried to go up, it couldn't. It couldn't. Look at the momentum to the upside. There is really nothing. And then we have all these drops. Okay. And I said, I was looking for this market right here. I mean, this was my target last night. Remember the text I sent you? Look at price right now. It's 85.57. I said to should or to wait. Actually, I didn't recommend to short it because that's part of the scalping strategy when you make pips up and down. But for you guys starting out, the problem of shorting the market in an upgoing trend is that price can quickly go back up and make you lose money. So it is risky if you short this, because this is the prediction. But like I said, the market can do whatever it wants. It can only drop here, and the Bank of, the Central Bank of Europe, per se, when it opened in London, could have put big orders to the upside and take the price up. And so if you're counting on this short, you get stop out and you lose your money. But scalping for a few pips is what I did last night, and it did work. What you're learning on this strategy is mainly swing trade, because all of you guys work and have full-time jobs, and you don't have time to be stuck on the front of the screen all the time. So I said last night that 85.51, it should be the area where we're going to be looking for potential bounce. Now, on the daily, if I go to daily, that it's going to be right here, right? Where I can see the structure, right here. Actually, you know what? They're right here. I think that's why I said I put the question mark here. Because by the strength of this drop, guys, I think it's going to go all the way down to the pivot. Which, if it does happen, it's somewhere right here, where this flat line is, and this pivot here it is, this whole section. You can break this resistance and then come here. But it's got to break Kijun-sen. It's got to break the resistant one, and it's not easy to break this, and keep on. So if you notice something, another reason why I picked this spot is because, learn this, and I already shared this with you guys on the previous video. We traded fractals, these arrows here. All right. And as a rule of thumb for fractal trading, whenever you break a fractal, look at this. This is a breaking of this fractal. Whenever you break that fractal, price goes up until it ranges right here. Try to break this other fractal, was rejected. Now, guys, we're making these decisions based on, again, confluence. We look at several things. When the fractal is broken, it comes back to the fractal. You know, goes up and go down, goes up and go down. So it broke this fractal. This is what is called a breakout candle. So it came out of this range here. Let me do some of these things so you guys can see. There was a range here, right? I can actually go up to here. Actually go all the way here so you see the breakout taking place. So there was this fractal, down, breakout candle, broke the fractal, opened the next candle, kept going up. This fractal, together with this blue line, is going to become magnets. It's going to comprise back down here. Now, this is why we do confluence, because not always everything works. And sometimes it breaks a fractal and it keeps going all the way up. But, you know, that only happened a few times. Almost 90, I would say probably 85 to 90% of the time is going to break the fractal, come back to the fractal before it keeps going up. So that's why, again, and with this I'm going to close, I'm calling this prediction to be somewhere here, as a probably goes into a range, and then it takes back up for another small rally to the upside. Now, because price has been going up all this time, look how it went up, range, down, and then it created new higher highs over here. You know, I'm hoping and expecting it's going to go up, but it could very much come back down to this level and then range. All right. So just always look for your trades and keep your eyes on it. One of the screenshots I shared with you was this one last night, and it's on the 30-minute candle. Look how this box was set up, which is a range. Remember, guys, price goes up, 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 and it ranges. Then it may come down and it keeps going up, and then it ranges. Okay, this is also called consolidation. For the, you know, to keep it simple, let's just call it range, because it is a range. Okay, some people call it a accumulation period. And yes, all of that is true. Let's just call it range. Okay, guys, every time you see a range, learn this, guys, and build this habit. You want to put it on a box, because you can trade a range. I don't want to confuse you, by going up and down, up and down. You short here, you buy, you close here. You buy here, you close here, and so forth. Okay, when it's in a range. But for the stage where you guys are now, watching this first video, let's wait for breakouts of the box, like I show you right here, these breakouts. And you don't want to trade the breakout, because let me tell you this, I didn't invent these things. Okay, I'm not the genius who created these things. And market makers know that there are traders doing this. So what could very easily happen, look at this, right? If you see this right here, look over this, right? Sorry for my poor line. Look how this candle broke. So it was a breakout candle from this level. And look what happened right after. So if you never trade the movement of a candle, okay, guys, that's a recipe for disaster. And that's what a lot of new people do. They see this moving up, they see moving up, and there is momentum. And because I can guarantee you, after looking at all these small candles, this one was moving very aggressively. And new traders say, oh, it's going up, let's jump, only to find out that there is a ceiling and it was a fake out. And so price went down all the way here. From here all the way here. So you're never gonna break a trade right away when you see this candle. Okay? In this case, we were predicting for this candle. You either trade, if you feel comfortable with the range, you trade from here and going down. I knew, look at where the blue line is. So I knew that the chances of this price to go up was very significant. But remember, this is the 30-minute. And the higher time frames rules the lower time frames. So the daily, the blue line was way down here. The 4-hour, the blue line was way down here. Now this helps me to validate that we're in a range and that it's not going to go much higher from here. But I'm expecting this blue line to take a curve and down. And when you trade, if you look at my screenshot for my phone, I entered right somewhere here in the breaking of on the breaking of this level, and I only traded for 10 pips until somewhere. Actually, I traded from here all the way to here to the level, and I set my stop loss to be a little bit north of this right here. Why? Because I was looking some short pips. It's a scalping strategy, and my stop loss coming from here to here, I did like a 1-1 ratio. Okay. I mean, it's hard to see it with all these things, but I did like a 1-to-1 ratio. So that's what I did. I entered here, made $100, and my stop loss here. So I made $100. I could have lost about $100. Okay, but I felt comfortable that it was bouncing on below the green line, which is the price. When I entered, price was like right here. The price was pointing down, so I felt comfortable to do it. And let's see, now that we see this picture from last night at 12 o'clock, let's see what price is now on the 30-minute chart. Let me go here. Let me zoom in. And let's do 30-minute. You can see it. All right. Look at it. Look at it. Guys, this is amazing. And I hope you can see. And, you know, I really wish you guys to make, you know, this consistent income for your lives. And you know, you can really adopt this. Check it out, guys. I remember this is the box last night. This is the 30-minute chart. This is the box from last night. Check this out. I entered, where was it? This level. So I entered on this indecision candle. And I just went down this candle. I got out when it hit this level. Look at the Chico span, how it bounced here. And I got out there. Why? Because I knew this fractal, bear fractal, hasn't been broken yet. And the chances that we go back into the range up here was very big. I mean, when you're bouncing at these levels and there is a bear fractal, the possibilities for this price to just do this were very, very, very big. Remember, when I entered, actually I can see here, and I forgot. Look how the blue line pointed down. That's what you want to look for. Remember I said this is also momentum? So pointing down, this inclination with this inclination, with this indecision, helped me have confidence in understanding what 4 hours said and daily said to trade it just a little bit on this candle and then got out. But look how it dropped on the second candle. And that's why I got out here, because I saw this line, blue line, was like somewhere here. And I said, you know what? Remember, blue line chases the price. Okay? Because, I'm sorry, let me take that back. That's not really accurate. The green line chases the price. And you always want to be, if you're shorting the market, below the green line. If you're buying or going long on the market, above the green line. And the blue line, it always wants to be closed, but it stays out. It stays far at times when the market is flat. And price and blue lines will be a magnet. So they're always going to come back. And this is a perfect textbook example, guys. I said last night, this green line, look how perfect this is, was my entry point to really go short. And I put this circle last night where my zone was. Look how it's going to keep dropping. But look how it got flat. So this is not going to go much farther, at least not in any time soon. But check this out, guys. It went up to the line. This line now, which is the fractal level, which is the Chiku span level. This green line became a very strong resistance. But the blue line was flat, so price was being dragged to it. Boom, asking for it. Look how almost an inch away price was rejected on the blue line, creating a fractal, bull fractal below the previous bull fractal. That's another key. And this candle was rejected, and now we're outside the box at this point. Actually, let me expand it all the way here. Okay. And indecision candle right here. And this right here, guys, at this level, which now we need to look at this level, but this was original level. Another candle open. You could have entered here if you didn't feel comfortable here, which it should have been. Look at this. Blue line, inclination. Green line, above price, inclination. We are below the cloud. I'll teach you about the clouds in another time. Okay. The cloud for the future is red. This speaks of the future. This speaks of the past. And the cloud, price was below. Cloud was bearish. Chiku span is pointing down outside price, which is another key. I'll tell you that later. And my higher time frames were chasing this blue line here. And like I said before, higher time frames rules any lower time frame. So look how the blue line is still way far from price. Way far, guys. So that's why I'm thinking, if the blue line doesn't hurry up and come and catch up, which that's what I think it's going to do. That's why it's been pointing up. What's going to happen is that's why I kind of came to this second arrow here, because I'm thinking that price and blue line are going to meet somewhere here. And that would be an interesting, that would be interesting to to look. Yes, it can either do that or it can just go flat and then keeps going back up right over here. But these are the things you're gonna be looking for. So daily rules the 4 hour, the 4 hours rules the 30, the rules the 1, the 30, and so forth. Okay. So here, right now, if you were about to take this trade, what would you do? Think for a second. Right now it is 6:07. I'm about to finish, guys. What will you do? Say with me, nothing. Why? Flat, flat. It's bending. So this is a clear level. Look how this rejection on this previous candle. This is a clear level, and we are in the zone that I set up. So when I set these circles up, by the way, for future references, I'm saying that price might stop somewhere here. Okay? Price might stop somewhere in this zone. So look, I'm going all the way to 85.40. Why? Because that's where this strong support is. But it can break it, but not without a range. And when it goes into a range here, I think what's going to happen is going to go into a range. The blue line from the daily will, at that point, which is the 40s right here, I think they're going to try to meet somewhere here. Well, let's see. Well, guys, this is it for today's webinar. I promise you guys to make this video on the London session. It is 6:09. I have to get ready for the rest of the day. I gotta take my son to school. And this is the life of trading, guys. You'll learn this with time, with practice, and you're gonna be able to go to work. This is the beauty of trading Forex. If you were trading the stock market, you probably won't be able to do this right now. You could do the analysis, but you'll have to wait until the market opens at 9:30, and that's a whole different story if you have a full-time job. But with Forex, you know, I traded last night at 12 o'clock and I made $100. And we're not looking to become rich overnight. We're just looking to be consistent daily. Yes, consistent is the name of the game. So thank you very much, guys. Let's keep our eyes on this pair. Oh, by the way, there is no need. There are so many pairs. There is no need to be jumping from one pair to another. Okay, and I wanted to say that for a long time, and I keep forgetting. Especially when you're starting out or you're learning a strategy. Yes, you will look from pair to pair when you don't find setups. Okay, but once you find a setup on the daily, okay, once you find a setup on the daily, you want to start doing your analysis from the top down, really close analysis there. You really don't need to go to lower time frames. You just need to stay with the daily and the 4 hour. I only use the 30 just for points of references. And as you saw, to kind of understand what's happening in a closer time frame to my position at the time of possibly entering the market, entering the market. But daily and the 4 hour. And once you find, you go this, by the way, if you're on the daily and you're scanning for markets, all right, checking different pairs, then you want to look for the setups. And then once you find that setup, stay with that paired and do your analysis. Okay. So happy trading, guys. It's almost an hour video. I thought it was going to be a 20-minute video, but because we are not just talking about setups, we're also training and taking a little bit more time to make sure you understand. This video will stay as video number 1 on the Ichimuko system, so that it can also serve as a practical guidance for future references. All right. Happy and blessed day. God bless you all, and talk to you guys soon. Bye-bye.